Well, the local market clawed back some ground in the afternoon session to finish the day flat. I spoke to Marin Lakos from Macquarie Private Wealth earlier. Marin Lakos, I guess the glum mood on Wall Street and elsewhere around the world meant that the local market was never really going to get to any dizzy heights.
No, not today, Tiki, but at the end of the day, I think over the last month, the Aussie market has actually been outperforming in a relative sense, certainly playing catch-up to US and European markets. In fact, over this past month, we've certainly seen the Aussie market performing better when we've seen European and US markets down. And today is certainly a case worth mentioning. We're basically square or slightly down, with the market down at worst about 20 points. Key sectors performing is banks, telcos and healthcare. They're in positive territory, with materials and energy the weakest.
Now, the big insurer QBE had its annual general meeting today. Any insights for investors about its outlook?
Well, certainly lots of insights, and the outlook is certainly looking a little more rosy. To give you an example, the large catastrophe events that they had last year was basically down 5.5%. This time last year, we're only down about 1% at the moment. So they're certainly seeing an improvement on catastrophes, which is good news, seeing an improvement on premium income as well, which is also good news, and they are predicting to see their profit margin improve back towards 13%. That's their insurance margin. If you remember when they had their downgrades, there was expectations around 10 or 11%, actually came in at around 8. So we're seeing some improvements all around there. And understandably, the share market's taking that very positively, with the share price up over 5% in today's trade.
Now, Transfuel Services has come out of its trading halt after that profit warning. The market isn't really very happy, is it?
No, not at all. Down 12%. The profit warning really extends in regards to a number of things, particularly bad weather has been halting work for them at their Eastern World project, which is an iron ore and coal project. That's to some extent been known, but the downgrade accounts for about $9 million for that relates to Eastern World. But the interesting, or the surprise, was that a cable project, construction project in New Zealand, which is almost 85% complete, they've taken a $16 million legacy provision against that, and that really has surprised the market. So the stock has really been sold down very heavily, down about 12%.
And I know another weather-affected stock that you've been looking at is Boral. How are you seeing its prospects?
Yeah, look, no official word out of Boral itself, but we've certainly done a review given the bad weather. Now, the current guidance by Boral is based on more normalised construction activity, and clearly we're not seeing that, along with, of course, the wet weather that we have been experiencing. And so we've downgraded our earnings expectations on Boral for these very factors. Residential construction equates to about 40% of Boral's earnings. And clearly we're seeing housing approvals down about 7 or 8% in the month of February, and this time, on a year-on-year basis, down about 15%. So Boral's going to find it very hard to meet its guidance, we think, going forward.
Certainly is quite a risk, the old weather, isn't it? Marin Lakos, thank you very much for joining us.
My pleasure as always, Tiki. Thank you.